Today, we're going to dive into 5 questions about crypto here on Retirement Approved and hopefully explain it kind of like for a 5th grader right here on the podcast today. Hey everybody, welcome into the podcast. It's Retirement Approved with Matt and Steve Paul here. And we're going to talk about decrypting crypto and dive into some top 5 questions that the guys get asked on a regular basis. And hopefully we can kind of keep this low enough level that I think everybody can kind of take it in. I know, guys, when you were kicking this around, you were like, okay, this is getting a little complex. So maybe we better scale this down to like going back to that old school, are you smarter than a 5th grader kind of thing, right?
Yeah, I mean, we outlined the whole thing and it's like we're just throwing out a bunch of technical crypto information. It's like this is really complex. We got to simplify this a little bit. So what we decided to do today was have a little bit of fun. I'm going to take on the role of the client and I'm going to ask Matt actual questions that we've received from our clients.
Perfect.
So let's jump right into it.
Let's just get it on.
First question. Are you ready, Matt?
I'm ready. Let's do it.
All right. First question. My grandson told me that I could invest $10,000 in a coin called dog with hat, and I could become a multimillionaire. Is this true?
Dog with hat.
Oh boy. Yes. And that
actual questions too. Remember that.
Now, if you had a time machine and you go back in time and buy it a few months ago, 6 months ago when it came out, sure. Yeah. But now it's like a $3 billion market cap coin. And all you get for it is a picture of a dog with a hat.
I feel like we need a clip of the Wayback Machine from the cartoon, right? Mr. Peabody and the Wayback Machine,
yeah.
Right?
Yeah.
Then we could go.
Well, at the very least, we'll throw up a picture of the dog with a hat.
There you go.
So everyone can see it. So if you want to turn $10,000 into $1 million in that, you're betting on this meme coin, which is a joke, becoming bigger than Bank of America.
And is this Elon's favorite one? Is this what we're talking about?
So Elon's favorite is Dogecoin, which is actually in the top 10. So we'll put up a list of the top 10 here.
Okay,
so you
let's
see
do that
Bitcoin, Ethereum, and then all the way down there you see Dogecoin, which now has a market cap equivalent to DTE Energy, and that's a joke.
It's just crazy some of the returns that you can see in this sector. And again, these are meme coins. And yeah, you could hit it big. You could get really lucky. And there's some smaller cryptos out there, some smaller projects where you could make a heck of a lot of money. And if you look 2 years out, you're probably going to make much more in those than you are in Ethereum or Bitcoin. But today we want to focus more on the blue chippers. We want to focus on Bitcoin. We want to focus on Ethereum. And we would consider, those are the only ones that we would consider really recommending to clients if they wanted to take any type of risk in this sector.
Yeah, the problem a lot of people have is they look at the market cap. You can see Bitcoin over $1 trillion, Ethereum over 300 billion, and they say, I don't think that's going to go up 10x, so I want to take a more risk. And you kind of go down the curve, just like a lot of people do in the traditional world, and they go all the way down to penny stocks, thinking they can find the next, I don't know, Tesla in that mix, and it's just a difficult game to play.
Gotcha. Yeah. Okay. All right. So dog with hat question. That was the first one.
Yeah. So no, we're not recommending dog with hat. Shocker. All right. So let's get into Bitcoin versus Ethereum. One of the biggest questions we get is Bitcoin and Ethereum. Are they the same thing? What did they do? Which one's better?
Yeah. So let's go all the way back to the late 1800s. I think it was 1887. Alexander Graham Bell invented the telephone. So that was a big invention, just like Bitcoin. So Bitcoin is a new invention. It's a new thing. And really, if you wanted to communicate with someone in 1884, you had to write them a letter, pen them a letter, and put it on a horse and carriage. I don't even know, and hope it got there.
Or maybe telegraph, right?
Telegraph, yeah. Where now you have a phone, but for instance, in the first month the phone was invented, there wasn't much of a network effect because no one else had it, so it wasn't really valuable. And now we're 15 years in, so we're starting to see that traction pick up.
Oh, okay. So Metcalfe's law, you're talking network effects here. Same thing with Facebook. When it was created by Zuck at Harvard and 20 students were using it, there's not much going on there, but 20 became 200, became 2,000, became 2 million, and on from there. And you look at the network effects, it became what it is today now. So you're saying the same thing's happening with Bitcoin.
Yep.
Or
So if
beginning
you go
to,
back,
anyway.
well, starting to. So the Winklevoss twins originally just wanted to be a Harvard, I think it was called Harvard Connect. And now it's $1 trillion company. It never would have been $1 trillion company if it just stayed within Harvard or within colleges for that matter. So that's the whole thing. So consider Bitcoin the telephone, and you could make
what's Ethereum then? If Bitcoin's a telephone, I'm scared that Bitcoin maxis are not going to like what you say Ethereum is here.
Yeah, yep. So you can consider Ethereum the smartphone. So Apple, where you can have applications on top of it. So it's just taking the telephone to the next level. And that this is not a perfect analogy by any means. Bitcoin can have applications on top of it as well, but Ethereum was essentially made for that. So you're seeing a lot more of the development on Ethereum versus Bitcoin. So that's why the network effect might end up being bigger for Ethereum if they're able to attract more users and more use cases. But that remains to be seen.
Now with Bitcoin and Ethereum, the other major concern is security. When you talk to our clients, and again, a lot of our clients are retirees or pre-retirees, so we're talking about folks, in their 60s, maybe even 70s, and they like to call this magic internet money. That's held up where? In the cloud? Where is it? I can't see it.
Where is this cloud?
Yeah.
Where is this cloud?
Let's talk security. Where is it? And is it secure?
It's the old Zoolander thing. The files are in the computer and they're picking up their computer.
We got 30 years worth of files right here in this computer that are going to bring you down. Where'd all the files go?
The security method for Bitcoin is called proof of work. And we touched on this at the end of the last episode with the halving, but essentially just high powered computers are mining for Bitcoin. So they have to solve problems just like you'd mine for gold. And I know that's a really hard thing to wrap your head around, but the whole point is they're expending energy in reward for the Bitcoin. And right now, I just looked it up. It's consuming about 1% to 2% of the total energy in the US. How crazy is that?
That's why it's
2%.
Yeah. And then Ethereum actually launched as a proof of work coin, and that's now switched to proof of stake. And the easiest way to explain that is you take your coins, you essentially lock them up, and you can get a dividend yield and secure the network from it. And the terms don't necessarily match over. It's not necessarily a dividend, but that's the way our clients can think of it.
So let's talk decentralization then. So you talked about securing the network from your own computer. So when we talk about decentralization, are you saying that there's possibly thousands of computers around the world, maybe even more, securing this network? That's why it's called decentralized?
That's the whole point. So around the world. So not one government could come in and shut it down. So yes, and thousands of computers doing that. So the Mark you're probably familiar with, 20 some years ago, people used to download music, BitTorrent.
Why has it got to be me that's familiar with it?
No, because you're in the music biz. You're in the music biz. So
yeah, definitely.
Now, none of us would have ever downloaded music. No, I'm not saying that. But
hey, man, I go back to the original Napster conversation about ripping stuff. So
and that was a BitTorrent where everyone would share just a portion of the file, and that's an example of a decentralized network.
The next major question here. This one's funny because this is the one we received the most.
Is this better than dog with hat?
I'm going to try to ask this with a serious face because it's really funny to me because I've been asked it several times. It's a pretty complex question. So
okay, shoot.
Picture me as like a 60 or 67-year-old kind of grumpy older man too.
All right, Bob, Jim, Dave,
you ready? Who uses this crap?
Oh boy. So let's go back in time to the internet. So we've got a chart that shows the internet adoption versus crypto adoption. So internet started in 1992, crypto started in 2016 here. And you and I are about the same age. We're about 3 years apart. You're coming up on 40. Let's think back to the early days of the internet when you had to sign on and hear that obnoxious noise. I think take the phone off the hook for a bit. And who was using the internet back then?
I was in high school and college students, younger people.
Yep, and we were chat rooms and AIM. I think was pretty.
You had a list of your friends that you could talk to.
Yeah, exactly.
You could download a picture and wait 5 minutes for it to slowly download. Yeah.
Yeah, yep. So it was. I know older people were using it, but it was definitely a younger revolution there. So younger people are using it right now, along with lots of scammers.
Yeah, for sure.
Yeah, and developers and all that. But that's the problem is there's so many scams going on. So if you're actually using the network, you don't know if you're clicking the right buttons and that kind of stuff. So that's why for our clients in the 60 plus range, typically going to not recommend that they take possession of their crypto. You can use something like a Fidelity or a Coinbase. And now there's ETFs that you can get exposure to. But really, if you think about it, it's a younger person game right now. But how much wealth are the baby boomers sitting on that's going to transfer over the next 20, 30 years?
A lot, isn't it? Like 50 trillion plus, something like that?
Yeah, I think it's even higher than that. It's like half the wealth here in the U.S., right? Like almost 80 trillion.
Almost 80 trillion. So 156 trillion of wealth here. Obviously, that number goes up and down depending on the day, but 78 trillion is going to be passing to younger generations from the boomers. So that if the trend of usage, as we saw in that chart, if that continues to go up like it has been, that's very bullish for this. Now, I'm not saying it's going to keep going up like it was with the internet. Who knows? Maybe it stalls out or even starts going down if use cases don't come out. So that's something that remains to be seen.
I mean, in Europe, now you have these ETFs that are out as well, where some of these boomers are now starting to dip their toe in the crypto pool here, wanting to own a little bit of Bitcoin. And we could see another ETF possibly this year with Ethereum. So,
yeah.
Well, I think that, as I'm not a boomer, but as the oldest of the three, I think that probably makes people a little more comfortable, right? Thinking about like the ETF takes a little bit of the pressure off, I suppose, and also the confusion of understanding what all this crap is, to Steve's point.
For sure.
What makes it a little bit more legitimate? It's easier to buy BlackRock's ETF. It's like, all right, BlackRock's backing this. I trust BlackRock. I own other funds or Fidelity or whoever you choose to buy through. Makes it just a little bit more legitimate than buying actual Bitcoin and holding it in cold storage or on Coinbase, let's say.
Yeah. Okay.
Yeah, and I'll take it one step further. So the question was, who's buying this crap? And now that it's available through Fidelity, and Fidelity Canada actually had ETFs sooner than the US, they actually just added it into some of their ETF models, kind of like a target date fund. They call them all-in-one funds up in Canada, but they added a 1% conservative allocation to Bitcoin, and then on the aggressive end, a 3% allocation. Now that's just Canada. We're talking about $2 billion, I think, was the total market cap on these funds. But if that starts happening across the world, particularly in the US, if Fidelity were to add it into managed models or BlackRock, or they're probably not Vanguard, they're pretty anti this stuff, but you get the idea. So as this continues building out, we're going to see a lot more of this, hopefully.
Yeah. And with everything going on with the dollar right now, I mean, what's our debt at? 35 trillion now?
Yeah.
Inflation's been a major problem. I mean, it's not just gold and silver people are looking at as a hedge. Now you're looking at things like Bitcoin and Ethereum. Throw maybe, like Matt was talking about, 1% to 2% of your portfolio and something like that as a hedge to the dollar.
Yeah, and one thing to add to that, you're seeing companies, Tesla's one of them, MicroStrategy, they're going all in, but they're actually, instead of holding their balance sheet in dollars, they're actually holding Bitcoin just because of the inflation concerns.
Let's dive even deeper. So I was watching Larry Fink about a month ago, and he was talking about the future of the stock market and the bond market being built on chain, on blockchain, everything being tokenized. Can you talk a little bit about blockchain? What is that? Is that just specific to the stock market? What are we looking at there? Let's dive a little bit deeper.
Definitely not specific to the stock market, but what Mr. Fink is talking about is they actually launched a tokenized version of a treasury fund, and it's got, I think, like 300-400 billion in it at this point. And that's kind of like the first iteration of a tokenized fund or a tokenized stock or tokenized bond. And when I first started reading about Ethereum back in 2017, I was like, oh man, this could really innovate the financial industry, because we're still sending faxes and waiting days for funds to settle when you sell an ETF.
Mm-hmm.
A client deposits cash and they need some back. It takes days for everything to settle, where this is all instantaneous. So it's pretty neat. So BlackRock is building out funds potentially. And
yeah, I was going to say, how many times have you heard a client go, why are you holding my funds? This is my money. I want it back. Give it back to me. Why do I have to wait a couple of days? There should be a better system. Well,
yeah, We're exactly.
working on it. Yeah.
Exactly. Yeah. So you got big companies building on it. So BlackRock's one of them. You could say Microsoft, Visa, PayPal, JP Morgan, Ernst and Young, one of the big four accounting firms. They're actually building out software to build on top of Ethereum for other enterprises to work off of. So there is a lot of innovation going on in this sector. And I think it's past the point of potentially being a scam. And I think that was a lot of the hesitancy, I don't know, 5-6 years ago. Like, is this all going to go to zero at this point? And I think we're safe to say we're past that.
And that's fair too, right? A lot of people definitely have those early on concerns, and there was a lot of crazy stories out there anyway. So definitely fair.
Oh, I mean, I was one of them. I think I first heard of Bitcoin back in like 2011, 2012. I had some friends mining it. I'm like, what in the heck are you doing? This is obviously a scam. And at just some point, you have to kind of do the research and go, oh, okay, I was wrong. But we're all stubborn. We don't want to admit we're wrong.
Think about that story that's already been pretty I guess viralized or whatever, about the guy who paid for 2 pizzas with a bunch of Bitcoin back in the day, and now how much just those 2 pizzas were worth. It probably cost him like a ridiculous amount of money.
Millions for sure. Yeah.
Something like 10,000 Bitcoin or something. It was something crazy for 2 pizzas, because no one, it's like, who cares, and now it's like big money.
Well, it's funny too. We were talking about it a couple of days ago. It's hard to visualize what you don't understand, especially when it comes to technology. I mean, I remember having a teacher explain to the class, this was pre-internet, what he thought the internet was going to be. It's going to be this global marketplace that's built into your computer, and it's going to be like storefronts, and you can go to the different stores on your computer. And we're going, what are you thinking? You're out of your mind. And he was spot on with that. We were talking about our own grandpa, and I remember sitting down. He was a big boxing fan, and watching a fight with him. And he just bought this new TV. It was like 8,000 pounds, and it took up the whole corner of the room. And he goes, "This is the pinnacle of entertainment. I don't know how they make it any better than this. And now look what we have."
Yeah, good stuff. All right, so what other questions have we got, guys?
What are the risks? So we talked a little bit about blockchain. We dove deep into that. What are the risks of Bitcoin and Ethereum? We talked about scalability. Let's go a little bit beyond scalability. Let's go regulatory. Are there some regulatory risks that we should be concerned about?
Yeah, for sure. So Bitcoin is a little bit more in the clear on that for the moment. So it's been deemed a commodity by both the CFTC, that's the Commodities Future Trading Commission, and the SEC, Securities and Exchange Commission. So that now has ETFs. It's good to go. It's a commodity. Ethereum's a little bit more of a gray area. And I say Ethereum and everything else. So that's the other 14,000 cryptos, but really maybe only 100 are truly valuable. But the SEC is kind of wishy-washy as if it's a security or not. And at the end of the day, I don't think it really matters as much. We just need that clarity eventually, so that way we can have ETFs and more traditional products off of it. And we know who can hold it. Does it need to be a broker dealer or crypto firm or securities firm? Who the heck knows? So there is some risk there. And then beyond that, there's regulatory concern with Bitcoin. Is a government eventually going to come in and intervene and try to seize the stuff because it gets too valuable and we're leaving the traditional system? Who knows?
So do you think Ethereum is up next? Do you think there's an Ethereum ETF? I know BlackRock's applied. They have a great track record. Where are you at there? I'm putting you on the spot. I told you I'm going to ask the client questions.
I wish I knew the answer, but I know May 23rd, I believe it's VanEck or ARK Invest has an ETF that's going to either get approved or denied by the SEC. Sounds like it's going to get denied from what we're hearing. But at the end of the day, it'll probably eventually happen. And what we're talking about is a spot ETF. So that was the big deal a couple months ago with Bitcoin when it got the spot ETF. It actually, when BlackRock originally filed for the ETF mid last year, second quarter last year, that kind of kicked off the bull run for Bitcoin as everyone wanted to get in before pensions and endowments and wealth funds were able to buy into this ETF.
So let me ask a question on the scalability thing here, guys. So think about Netflix and how their business has changed, right? For a lot of us, we remember the fact of signing up and getting, one DVD. That's right, a DVD, not a Blu-ray, right? One DVD in the mail in the little thing, right? So kind of they've scaled themselves forward and they kept moving through the thing. Is that a fair kind of
that's actually metaphor? A perfect analogy. Yeah. So you're limited as to what the internet can provide in that case. So back in the day, I remember renting a DVD because we never returned it, and we still have it. I don't know which one of us has this, but it's the Legend of Bagger Vance back in 2000. It was mailed to us.
They're gonna hit you up now. This is on the internet,
Hey,
so they're
I'm
gonna be
paying
like,
Netflix
"Hey,
enough money. I think they'll be okay with it." But yeah, we used to mail DVDs back and forth. How wild is that to think
Yeah.
you're mailing DVDs back and forth with a Fortune 500 company? I know they weren't at the time, but
right."
the internet would have never allowed them to stream videos in the year 2000. They had to wait almost a decade before that was even a feasible option. But Blockbuster never even thought that was an option. They wrote it off and said, we're not going to go this way. But
Right. Everybody wants to go to the place and pick it out, and then, which we love to do, right, in the late 80s and early 90s. But yeah, times change.
Yep. Well, that's exactly where we're at in the blockchain world right now. We're kind of mailing DVDs back and forth, that equivalent. That the apps are a little bit slower, clunky. The liquidity's not there. But if we fast forward 5 to 10 years, who knows where this is going to go?
Yeah.
I remember after Matt lost that DVD, he goes, "Don't worry, it's not a VHS, it's a DVD. These will be around forever." Well, again,
There you go.
It's
There
so
you
hard
go.
to visualize where we're going. So just because you don't understand everything, and we talk about it for what, a couple hours every day. I mean, we've been obsessed with the crypto sector for years now, and we're still learning things. It's so difficult to understand. So just because you can't visualize where it's going doesn't mean ignore it completely. You still want to own it. You just want to be very careful because there's a ton of volatility in this sector. But I mean, a 1 to maybe 2% allocation, especially if you have those accounts where it's like, I'm not touching those. Those are eventually going to the kids. Maybe I'll use them 20 years down the road, but I don't need them for income. A small allocation into Bitcoin, maybe Ethereum, I think makes a lot of sense.
Yeah, you said something right there. We don't know where it's going. That's also a primary risk, because we don't know where it's going. We don't know if applications are actually going to be useful and attract active users, because after all, to build out a network, you need a lot of users, and we just don't know what's going to happen over the next 5 to 10 years. Maybe there's not really much useful in a decentralized social network or a decentralized financial system, and maybe we're just fine with what we have. So who knows?
Yeah. All right. So is that 5, or do we have one more?
So number 5, well, we touched on it a little bit, allocation in a retiree's portfolio. So what would you recommend? What would be your recommendation in a retiree's portfolio? What percentage goes into this crypto sector?
That is a tough question because it is the highest volatility asset out there. So yeah, the easy answer is case by case, but I kind of like what Fidelity Canada did with that ETF approach, where they have 1% in conservative all the way to 3% to aggressive, kind of like a gold allocation. So just an alternative where it's a small portion, never going to kill you if it does go down 70-80%. But if it's something that doesn't appeal to you, just go with zero. The traditional stock bond world is perfectly fine. That's the Vanguard approach. Vanguard's not even allowing their customers to trade the Bitcoin ETFs on their platform. So I have absolutely no issue having 0% allocation to this stuff.
Well, let's wrap it up here with this one little final thought as we're kind of, walking this down here, guys. You didn't even I didn't even hear you mention the rise of AI when it comes to this, right? So what's that going to do to the whole equation? You're talking about scalability and not sure where it's going to be just yet. Add this joker into it.
Yeah. And that's something that could certainly change the world if we have AI starting to use payments. It could be on Ethereum, could be Bitcoin. But that's kind of like the machine to machine payments where humans aren't even involved. And that's certainly probably
buying and
closer
selling
than we
us.
expect.
Yeah, the machines are buying and selling us and we don't even know it, right?
Yeah.
It's all completely unknown at this point. That's why we just don't know where it's going. We know the technology is there. We know the use cases are there. We'll see where scalability goes, like Matt was talking about, but it's just one big unknown. We're very excited about where it could go, but there's no guarantees.
Well, I suppose, Matt, we should make sure we put your compliance disclaimer hat on, right? This conversation today is in no way endorsing anything, correct?
You beat me to the punch. Yeah. So, I mean, it's an exciting sector, but at the end of the day, it's the most volatile thing out there. It's stocks with 10x volatility at this point. So if you're dipping your toe in, that's fine. Nothing to go all in on, and certainly consult with a professional prior to buying.
Absolutely. And how can you do that? Well, we have stuff up on the screen for you. But stop by to the website for retirementapproved.com. That's retirementapproved.com. That's the podcast website. But of course, you can also get redirected back to the main website for rwpaul.com and the team. And make sure you're having a conversation again before you take any action on this, something you hear on our show or any others. You should always check with qualified professionals like Matt, Steve, and the whole team at R.W. Paul and Associates. So reach out to them, 248-305-9911, 248-305-9911, or go to retirementapproved.com. Guys, thanks for hanging out and breaking down crypto for us, decrypting it. We'll get back in the Wayback Machine here and go back and rent some videos from Netflix, and we'll see you next time right here on the podcast. Thanks, guys.
Retirement Approved is brought to you by Richard W. Paul and Associates, an SEC-registered investment advisory firm. Throughout the presentation, we may generally discuss different financial vehicles. However, nothing we say should be construed as a recommendation to buy or sell any financial vehicle, nor should it be used to make decisions today about your investments or insurance. For full disclosures, check the show notes of today's episode.